Good day all, welcome to Black Bull Markets. Another market video here about what's moving in the FX markets, and the two key assets we can see are both the Australian dollar and the New Zealand dollar that are facing the most volatility this week. Really been spurring from the RBA announcement yesterday, with the central bank moving to a more neutral stance regarding their interest rates. And that caused a near 2% fall in the Australian dollar, and as per the usual domino effect, near 1.74% fall in the Kiwi dollar. And as you can see from the chart here of the Kiwi dollar, this is a 4-hour chart, we could see a break of this trend line that it was forming recently, and it broke it just below the 68-cent mark, and now we're facing pretty significant lows here following that, with the downward momentum continuing. Key things to look at here are the moving average crossover that happened recently. So this is really out of turn, and the fundamental push from the RBA spurred this move yesterday, and today we've had further economic data releases from New Zealand, whereby we've seen the biggest daily drop since August the 9th last year, and we could see 67-cent mark area be pressed further here. We had poor labour market data, so the unemployment rate is increased now from 3.9% to 4.3%, so 4 basis points there, and this is also adding pressure on the Reserve Bank of New Zealand to cut rates. So we could potentially see a move of a weaker New Zealand dollar price into the markets over the next few weeks, on the premises of odds increasing that the RBNZ could cut rates, seeing a lot of activity kind of slow down a bit here in New Zealand, and the labour market data of late is kind of showing that sluggish economy moving as we enter 2019. I would say Australia and New Zealand respectively are really feeling the impacts of the well-documented slowdown of the Chinese economy, not helped, of course, by the trade tariffs that are on play, and there's a lot more detail into that as the different impacts between Australia and New Zealand, especially where it comes to steel. However, on the broader macro sense, we're really seeing a lot of this momentum force investors to stay on the sell side and remain bearish, both the Aussie and the Kiwi, which are generally seen as safe haven currencies, or as they have been over the last 10 or 15 years in trading. But now really a lot more fundamentals are in play here. So traders for these pairs, especially against the dollar, looking at the Fed chair meeting this Thursday, of course, which is it's already Thursday here, but still probably Wednesday, or just waking up into Thursday for a lot of you, and that is at 12 p.m. So keep your eyes on that. And just going back quickly to this chart, you can see that the pairs kind of, it's now fallen through this trend line, and further to the 50-day moving average as well. The path of kind of the next area that we could see some sort of consolidation is this 67.07 mark, so about 50 points away from where we are here. We still could have a bit more room to the downside, even though the RSI was oversold. It is starting to get a bit of an upturn right now on the 4-hour chart, but this is just before the European session starts, so we could see a bit of a pullback to the upside, buyers coming in to reverse this. But I personally see this area here as a pretty strong support area, as it touched it once, twice in the last, since the beginning of the year. So 6707, mark that on your charts. It's a pretty key price level to look at. Now, going back to the Aussie dollar, I know we touched on it briefly. Apologies. We have, of course, another bearish pattern as of late. Shifts in the Aussie dollar again now to the bear side, around the 71 cent mark. The bear's really targeting this sub 71 cent mark, which it's almost breaking, and really the near term kind of support at that 70 cent mark here. If we get a break of this area here, the bearish pressure, as mentioned before, really released from this survey from the RBA, and also the survey detailed how Australians' consumer anxiety is at 3-year highs. So that, of course, is due to slower income growth, falling house prices, which again is pretty well documented in Australian cities such as Melbourne and Sydney. Record falls in house prices over there. Consumer spending is also on the weaker side as well for this year. So we're really starting to see a shift in momentum in these economies, these Australian Pacific economies. And all kind of a domino impact from their reliance on their trade with China. So consumer spending is a big part of that, because the Chinese money does flow into Australia and New Zealand directly, property, investment, etc. And with that slowdown, that is bound to have an impact. So again, now the central bank, Governor Lowe, I believe, and the RBA has opened the door to possible rate cuts. So will rate cuts be the answer? We're not sure, but we are definitely in the start of a downward cycle in these economies. So keep your eyes on both the Aussie and the Kiwi. Yes, and for any questions, we're here to help. Happy to help you. Please do message us. Subscribe to the channel for more great videos. And for any questions, do also let us know. All the best of luck with your trading today.